Welcome to Hub Dialogues. I'm your host, Sean Speer, editor-at-large at the Hub. I'm honored to be back in conversation with award-winning journalist and best-selling author Amanda Lang for another installment of our bi-weekly video and podcast series on the key issues concerning Canadian business, economics, and public policy. In today's conversation, we'll discuss the ongoing challenges of high inflation and how it's manifesting itself in our politics and policy. I'm grateful to get Amanda's reaction to last week's August numbers, which showed that inflation remains elevated above the Bank of Canada's target, and whether we should expect a return to rising interest rates when the bank is set to make its next interest rate announcement in October. We'll also cover recent policy developments, including growing attention to housing in the form of competing proposals from the Trudeau government and Conservative Party leader Pierre Poilievre to try to nudge provinces and cities into building more homes, as well as the recent spectacle of the so-called grocery summit, in which the Prime Minister and Minister of Finance, Chrystia Freeland, apparently put the grocery CEOs on notice that they expect lower prices by Thanksgiving. Amanda, we have a lot to cover. Thanks for joining us.
Great to be with you.
Let's start with the inflation numbers. You follow these issues more closely than I do, but I admit I was surprised. It's the first year-over-year increase since January, and it's higher than many economists expected. What's your top-line reaction?
So we, of course, need to strip out the real driver, which was gasoline prices. Energy prices remain a huge factor. That gets us to that perennial problem of why do we strip something out that's a very real cost to individuals and businesses. And while it is volatile, which is why economists don't like it, it's a real one. And you see that showing up on the bottom line for businesses, the input costs of industries that are heavy on oil and gas. You see them, they're the ones that are seeing their profits struggling in the last couple of years. So that was the big driver, but there is a kind of an uncomfortable amount of pressure from those so-called core areas as well. And it does remain elevated. We got a couple of days later, the review of the bank's thinking. And, the bank is basically saying, we don't know if it just hasn't been enough time for our previous hikes to take hold or whether we need to do more. So they really are doing a bit of a wait and see approach. And it will matter a lot on the data we get, especially on our household spending data in terms of what they do next. I think most people expect one more hike, but do they need to do more than that is still an open question.
Yeah, as you say, we won't hear from the bank until next month, but it is notable that some analysts are once again speculating about further rate hikes. One such analyst said, Amanda, quote, expectations for more tightening from the bank have shot up, unquote. Others are a bit more sanguine and anticipate the bank to maintain a rather cautious approach. What's your sense? How does Tiff Macklem balance this latest inflation news with other evidence that the economy is softening? How does he walk that line?
I mean, I think they are being extremely prudent because the thing that they really don't want to do, and this is true elsewhere, but especially the US, is, of course, cause a nasty recession. And it doesn't take that much of an overshoot on the credit side to put you in a position where suddenly you're needing to stimulate, lower rates, inject fiscal stimulus. That would be a disaster right now on all kinds of levels, including, of course, from a fiscal prudence point of view in this country. So the idea that they want to wait and see, there are signs that they're happy about. So you might remember that in the first quarter of this year, household spending was surprisingly strong, and the bank was kind of shocked by that, and it kind of shocked them out of their doldrums. We did what they wanted in second quarter, and we slowed our roll. We are, all of us, kind of saying, wow, our home values are adjusting and our credit is really starting to hit. The one wild card, and the bank made note of this in their commentary, is wage growth. It's still 4 to 5%. And there was a bit of catch up to do, Sean, of course, over a long period of time. Wages had lagged corporate profitability. So there was room for that. But that is a stickiness that the bank's watching. They want to see that stop. They want to see the slight softness that we're seeing in the labor market show up in weakness in wages. I'll tell you what I'm waiting for are the details of that Unifor tentative agreement with Ford in this country, because if that includes the kind of massive wage increases that the CAW is asking for south of the border, as well as huge other concessions, that'll tell you labor still has the upper hand. And by the way, as we've seen lately, that's a real interesting case, because even if there's a tentative deal, we've seen workers not ratify these deals in this country, right? The metro workers said thanks, but no thanks to the deal their union had worked out. So labor still feels its strength here, and that's something the bank needs to see soften a little bit if it's honest.
You mentioned the role of gas prices earlier. It strikes me, Amanda, as another case where Pierre Poilievre, either by intent or happenstance, seems to be ahead of the curve. He spent the summer on a so-called Axe the Tax campaign in favor of eliminating the carbon tax. And one wonders if the carbon tax faces greater political fragility than we've seen in some time. Canadians, on one hand, tell pollsters that they're committed to climate action. On the other hand, they have these growing concerns about affordability. Talk a bit about that cognitive dissonance and the challenge for policymakers in crafting policies that make progress on the climate, but try to minimize the negative effect in terms of higher inflation and pinching the pocketbooks of Canadian households.
Yeah, there's a political reality here. I wish it was called something else, Sean. When this comes up every time, I think, if only it wasn't called a tax, a carbon cost, a carbon toll, because what it is, of course, is intended to be a way of pricing in the real externalities, all of the downstream impacts of our use of filling up our, that standing there at the pump filling up our car. There's a bunch of other costs that we're now going to have to bear. And ideally what it is of course, something that'll help us manage our demand, right? We'll use less of it, we'll make better choices. And in an ideal scenario, it would go up and up and up, and everybody who could would make the choice to use less of this commodity. And then that would, of course, be the orderly way to reduce our consumption. You can't do it overnight. My biggest complaint actually about this is that they do this kind of sleight of hand where they charge it on one side and then send it back to us on the other. So that for a lot of Canadians, it's a wash. I hate that. This is, and I'm not somebody who often says, please, raise my taxes or make things more expensive. But I do think there are some things, and getting our footprint down is one of them, for all discretionary use. So could we get more creative about what's not discretionary, where people do need the extra support, who does and who doesn't? I think that is actually going to be the policy problem of the next, of any future government that's grappling with this, as we see that the proportion of that tax rise. But that it should go away, I think, just is wrong-headed about how to reduce use of something that we need to reduce use of.
Yeah, a ton of insight there. I know we've talked about it on past episodes, but it's worth just plugging for listeners and viewers that as the carbon tax rises to its projected peak of $175 per ton, the revenue that's going to throw off is massive, far more than one would reasonably expect to be returned in the form of the climate rebate. And so there are big questions in front of policymakers. Is that used to lower other taxes, whether they're personal taxes or business taxes, or for investments in new technology or whatever? And it seems to me that that question hasn't been resolved, and maybe it won't be resolved if Pierre Poilievre has his way. But let's come to housing now. It's something we've discussed in the past. Up until now, there's a case that the Trudeau government has been a step behind the other parties. Yet, on the heels of its recent caucus meeting, where one gets a sense that caucus members basically told the PM and his ministers to get their act together, we're starting to see new policies out of the government, including waiving the HST GST on rental construction. We've also seen this week a new private member's bill from Pierre Poilievre that would codify his plan to use a combination of financial inducements and financial penalties for municipalities to build more homes. Amanda, it's interesting that politicians are now seizing on this issue. The one challenge, though, is that at least the government is trying to walk a careful line where it says it wants prices to become affordable for those outside the market, but not to come down for those who own their homes. Talk about that challenge and how, if at all, it's reconcilable.
I mean, I think you're talking about the core of this problem, and I don't think it is reconcilable. And so I want to jump back to the plan, which, of course, from the federal government is an old plan. It was an election promise long ago in the midst of time that they're following through on. My initial reaction to anything like this is to ask, is this achieving what we needed to achieve? And then you get to the kind of why do developers need a tax break, your tax dollars, to incentivize them to do their own business? We don't tend to incentivize, furniture makers or tire manufacturers to do their business. So do developers need this? Do they need more profit? And I had a quick look, and this isn't exhaustive, but at the data that I could find on developers, their profit margins are pretty good. And it depends on how you break it down, but developers are something like 13% net margin. Construction companies, not quite as strong, but 5.5%. Which to me says they're doing okay. And if they don't have incentives to build, it's not a financial problem. So then we could debate whether or not a federal government or a would-be federal government trying to intervene at municipal level organization, that strikes me as problematic on a bunch of levels. Everybody knows we have this problem, which brings me back to your point, which is, of course, the only point. We have financialized our housing system. We've created it as a market of assets. And the participants, and the vast majority of Canadians are participants in the housing market already. Although as we bring, of course, new Canadians, that the data will shift. We don't want it to change. If we're really honest, we'd love the idea of affordability, and we definitely want our relatives to get in on this game, but we don't actually want the value of our assets to plummet. And that is what has to happen. And to me, the bright spot on all of this is this hasn't been going on very long. It's only in the last, now, obviously the financialization has been a process going back since the 1980s, but it's really only in the last decade or so of these incredibly low and falling interest rates that we've seen the massive distortion of our economy towards housing. And the Hub did some great work on this. I loved it, talking about why it's not a good thing that housing is now the biggest sector of our economy, housing and construction, because it's a non-producing sector. There's no value add to anybody else once you finish building a house. And that's the problem that we have. And so what is the problem? I mean, I'll toss that back to you, because you are somebody who's made policies. What is the policy that unwinds that? The only good news is it hasn't been that long. So I feel like we could do it. There's still those of us who remember when your house wasn't a windfall. It was just a place to live and store value, and keep up with inflation, basically, is what homes did for most of our history. It's only the last 15 years or so that we get these like weird spiky periods.
Yeah, Amanda, your observation that the problem here isn't the need for financial inducements for builders is such an insightful one. And it reflects a problematic tendency on the part of governments and policymakers, not just in Canada, everywhere. It's an age-old problem when it comes to public policy, which is whenever the market isn't producing an outcome that governments and policymakers want, they presume it means that there's a market failure that necessitates a government intervention. When, in fact, more often than not, the reason the market isn't functioning properly is because of pre-existing government distortion. So in other words, rather than layering new distortions on top of the market, the more useful thing to do is to step back and say, what are we currently doing that is standing in the way of markets doing what markets do, which is to bring supply and demand into something resembling equilibrium. And when it comes to housing, there are dozens of ways in which governments at all orders are influencing the functioning of the market. Some of them quite understandably, but we should be clear-eyed about what we're doing, right?
I think this is the key point, because people keep talking about market failure, and in fact, this market is functioning exactly as it has been designed to function. So yes, the question is what, and the analogy that I keep thinking of is to another basic human need, and therefore right, that we can all agree on, and that is potable water. Drinking water is something we all agree that everybody in Canada should have. We'll set aside the fact that some still don't, but we do. Can you imagine? Just go do a little thought exercise of imagine if we created a system where some of us get more water, some of us get nicer water, some of us have the water, and then we can sell it later for a windfall, because everybody needs water. So you know that somebody's going to, you would never envision a system where a government would participate in that plan. And yet housing is also a core need and a basic human right. and we've somehow let it get away from us. Now, it is more than that, and I'm not suggesting that we, I don't want like Soviet style, apartments built by government, but there has got to be some middle ground where we remember that, like other basic human needs, this one shouldn't be distorted by markets. It should, or we shouldn't create markets that have bad outcomes, which is really what we've done.
Yeah, I think that's right. But that requires a bit of introspection on the part of policymakers, right? Rather than simply layering new interventions on the top of the market, they ought to look in the mirror. There's been really good research done by the C.D. Howe Institute on the role of land use regulations, development fees, and so on in terms of influencing building at the local level. There are provincial policies similarly related to land use, and then at the national level, there is subsidized mortgage insurance. There is the capital gains exemption on primary residence. There, as you said earlier, the extraordinary low interest rate environment that we've lived in over the past couple of decades. So that's a very long way of saying, you use the analogy of water. The analogy I would use is, in most parts of our daily life, the market essentially is achieving equilibrium. We're not worried we're not going to be able to get an iPhone, or we're not worried we're going to be able to get a book or something like that. The areas where government is most present, childcare, healthcare, and housing, the supply-demand gaps seem to present themselves. And I don't think that's a coincidence. And so, there may be a role for government here to step in different places, but I think your insight that, first do no harm is a really insightful point. And hopefully it's something that policymakers take seriously. But I want to raise another structural issue that I've been thinking a bit about lately as it relates to housing. And that is the extent to which we are the inheritors of past decisions. Take the city of Toronto, for example, where you are. For the parts of the city about 3 kilometers beyond Union Station, there was a decision over time to essentially build detached and semi-detached homes and not prioritize density. It's hard to overturn that decision now, right? People are living in those homes and people want to buy those homes. So what do we do? How do we overcome these choices of the past?
Well, so we can't obviously overcome, we can over time. We could rebuild things. One thing, of course, that can happen immediately, it is in small ways, as you see cities grappling with this, is allowing for rezoning. So multi-family use of single family homes, garden apartments, all of these things that can happen right away and create more space. I mean, you can look at Toronto and say, the change in density in the core, the downtown core, with all of the building of condos, has been extraordinary over the last decade. And I love it. It makes it look like a real city. It's the infill is wonderful. What we didn't do along the way was say, hold on, what are we building? Are they all 300 square foot apartments for foreign students whose investor father is going to put them in there because I don't know who else lives in a 300 square foot apartment. There should have been more attention paid to the needs of families, the needs of affordability. And while we're at it, let's put some new schools in and think about where the local fire station capacity is and all the rest of it. There was just a lot of kind of willy-nilly building of this. I guess this comes back, Sean, to, I mean, you can make the case that the government is, I think when you lump healthcare and housing together, I think we'll get into a disagreement about whether there's too much government intervention in housing. I take your point that there are government friction points that are causing trouble, but in some ways there's been too little oversight about what gets built and where. And that would be one example I would say is the building we did do in big cities in this country was the wrong building for what we need. And nobody really was sitting thinking about a master plan of any of that.
Yeah. Your point about the kind of unevenness between the hyperdensity in the core relative to other parts of the city is a really good one. We'll be publishing some analysis at the Hub in the coming days that actually looks at the concentration of housing starts throughout the GTA. And it's really extraordinary. Within 3 kilometers of Union Station, something like 3/4 of all new starts between 2016 and 2021 has taken place. So there's this cone of major development and progress, and then the rest of the region which is seen far less growth. And I think, as I say, one of the challenges facing policymakers to try to get at these affordability issues is, I think your point is so well taken. It's a kind of two-step. It requires two steps, doesn't it? There's the quantitative part. We just need more homes, full stop. And then there's the qualitative part. How do we make sure that there's a kind of spectrum of housing from high-rise condos to single detached homes and everything in between, to make sure that we have the right type of supply for different types of people in different circumstances. And that's really going to be key, because I think we've talked in previous episodes about Mike Moffat's work on the exodus of young families from the city of Toronto. That's not good. There are huge opportunity costs to losing kind of young dynamic people. And so this is it's an economic issue. It's a social issue. We published an article a couple of weeks ago at the Hub entitled the housing theory of everything. And I think there's something to that if you go down, eventually what you find is housing is at the core of a lot of the challenges facing our country. But I won't let you go without coming to the grocery issue that emerged last week. It was a bit of a surprise at the Liberal caucus meeting to see the Prime Minister take a populist turn and demand that grocery CEOs come up with a plan to lower prices by Thanksgiving or face a punitive tax. The Hub has published analysis by Trevor Toome, which tells us that the idea that grocery prices are up because of excessive profits is wrong. It's mostly a consequence of the same inflationary trends that we've been talking about. But let me ask you a two-part question. First of all, what was your general reaction? And second, more broadly, as someone who spends a lot of time speaking to members of the business and investor communities, is there a risk, Amanda, that these kind of stunts harm perceptions of the Canadian market? Is there a cumulative penalty, in other words, over time for these types of anti-business actions, which I should emphasize are the current government in Ottawa doesn't have a monopoly over? One can find similar stunts across the political spectrum across the country.
So my first reaction was, and it's very much tied to our previous conversation, is it's so fascinating that it was in a space of 6 days that they were giving money to one sector. Here, developers take some tax dollars, and over here saying, hey, grocers, you're making way too much money. And the fact of the matter is, developers make more than grocers. They just do. Yes. And I've said a million times, I'll say it again, we should all be grateful to the grocers for staying in business, because their profit margin, this mythical massive expansion in their margins, which now has them somewhere like 3.6%, is less than you get on a GIC. So, why anybody is in that business is a good question. Are they making more money? Yes. You've done the data. People can look it up. Their revenues have gone up 23%. Their costs have gone up 21%. That little delta is the profit increase. They're very sensitive to that. So yes, they're making more money. However, they're still not making much. So my first reaction was, come on. To your point about how they should react, it's an interesting and it's a slightly more complex one. On the one hand, I think business leaders in this country know there's a bit of a game to be played, if you will, that these are politics, and that while they might privately roll their eyes, that they should publicly be seen to be being respectful to our elected officials, because there are big regulatory questions here. They did just undergo some real scrutiny from the Competition Authority here, who came back with a long list of things, recommendations, acknowledging that we maybe lack competition in this sector. And so the most interesting question, of course, is what was said behind closed doors. They've promised to come back in 2 weeks with a plan individual to their own businesses to manage prices. And I'm going to be waiting breathlessly for those plans, because these are very competitive businesses, and they're so competitive, in fact, that where we have to watch them like hawks is they use their clout to try to manage prices with suppliers, and they get into these bully fights with suppliers about whether they will raise or lower prices because they're so sensitive to pricing. The only thing I'll say is that this came in the Bank of Canada's note to this week about their last meeting. They are very mindful that inflation spiked because businesses in Canada were very quick to pass on increases. In a way that it was even faster than historically, because we can do it faster now. So people were very quick and responsive. Good for them. Will they be as quick to bring them down? The bank is asking that question. Will we see the commensurate decline in prices? That's going to be an interesting one to watch, and we should watch because it hopefully should come down. If it's going to come down, there's nowhere it'll come down faster than in a highly competitive business with margins of 3%. So I would expect to see relief at the grocery store, but let's wait and see what their plans are. I can't wait.
Well, I'm thrilled to be back in conversation with you, and fortuitously, we'll be back in touch with you in a couple of weeks. Amanda Lang, thank you so much for joining us as always.
Always a pleasure, Sean.